Welcome back to the Dividend Diplomats YouTube channel, everybody. Lanny, Bert, the Dividend Diplomats. Let's get ready, get hyped. We have Lanny's dividend stock watch list for January, hot off the presses. So we are going to talk to you today about 3 undervalued dividend growth stocks to buy.
Guys, welcome to 2022. Let's smash that subscribe button. Give Bert and I a nice thumbs up. We're digging into, again, 3 dividend stocks to buy this month of January 2022. Stock market has continued to be on fire, again, at or setting all-time highs in the S&P 500. But that doesn't mean we're sitting on the sidelines. We are still on that lookout for undervalued dividend stocks, more so also to see what you guys think of these 3 stocks to possibly buy.
That's absolutely right, Lanny. It still isn't easy to find an undervalued dividend growth stock, but you're right. That's never going to stop us from trying. The S&P 500 has had a very interesting January so far to start the year. It was right around 4,800 to start. Now it's been a rough few days. So the market overall year date is down 2.5% currently at the time we are recording this video. It's below 4,700 again, which, if you recall, just 1 month ago, we were talking about how the stock market's trending upwards, getting ready to push over 47,500. So man, what an interesting investing journey to start the year.
It's all about being ready. You know, you don't have to get ready if you stay ready. Case Keenum, Cleveland Browns. So we are here to talk to you guys about 3 dividend stocks. Again, we focus on the 3 Dividend Diplomat stock screener metrics. 1, the price to earnings ratio. 2, the payout ratio. 3, dividend growth. 4, yield. We do it in that order because you want to see if it's A, undervalued. B, is the dividend safe and can they grow? C, do they grow that dividend? And 4, how much are they paying you right now to hold that stock?
Absolutely right. So everybody, these prices are going to be as of January 7th, 2022. Let's get ready. Let's get hyped up. Let's go, everybody. And at the end of this video too, let us know, are you buying or are you watching each one of these 3 companies too? We want to see. So Lanny, let's talk right into here because this company is going to be pretty familiar for people that have been following our channel. Because what was interesting is you started buying this stock on a weekly basis too to complement your VYM weekly purchases. So it's been fresh on your mind for a few months now, and it's even more on your mind as it continues to show signs of undervaluation. Which company's first on your list?
Guys, we're talking Store Capital. Ticker symbol is STOR. Warren Buffett invested almost $400 million into Store Capital. You know, I'm a couple dollars shy of that right now. But Store Capital, again, a big REIT in the space. You know, you'll see what the dividend yield looks like. You know, and obviously you get paid more to own a REIT because they are required to pay at 90% of their earnings back to the shareholders, and then you pay taxes on your ordinary income rate. But again, Store Capital trading at 34.24, current forward adjusted funds from operations is what you look at from a REIT standpoint, and that's at $1.99. So you look at the AFFO ratio instead of the price to earnings ratio for Store Capital, it's at 17.2, which is, you know, pretty reasonable right now in the REIT space. Bert, what does that dividend payout ratio look like for that second metric?
That payout ratio here, you take their annual dividend of $1.54 per share. You divide that by the $1.99 AFFO that you mentioned there in that P to FFO ratio. That gives you a payout ratio of 77.39%, which is actually pretty low for the REIT sector. That's much more in line with Realty Income, which is known as one of the companies that has the safest dividend in the REIT sector that's grown it for the longest time. Store's in a great class there with that 77% payout ratio.
So guys, let's get into a little bit of dividend growth for that third metric. They've been increasing their dividend ever since they were a public company, you know, approximately 6 to 7 years at a 5-year average growth rate of 6 to 7%. So you have to really love that because you'll see what the dividend yield looks like. The factor is pretty solid here. You're getting that consistent dividend growth. So Bert, what's that bonus metric for Store Capital?
4.50% dividend yield there for Store. So think about that, everybody. How many dividend stocks are out there that give you a 4.5% dividend yield and a mid to high single-digit dividend increase on average? There's some, but not a ton out there. So that's why Store Capital continues to be on everybody's mind here in the dividend investing community.
But wait, there's more. So to get into that second dividend stock, we're talking Anthem. We're talking health insurance carriers right now. We put this one head to head earlier with United Health Group. So check that video out if you haven't already. The crazy thing about Anthem right now is that they're actually down about $30 this year. So
Yeah, that's insane.
yeah, they're down. They're down right now, down almost 10%. So you got to love this is a high dividend growth stock. So they're trading at $434.99 right now as of that January 7th close. Guys, brace yourselves. Analysts are expecting for this first ratio, the forward earnings are looking like $28.65. $28.65. So that means that PE ratio, that price to earnings ratio is at 15 right now.
It's just funny because I know it's completely different companies, but their forward EPS is 28.65. We just talked about how Store Capital share price is 34.24. So it's just kind of funny to see those two side by side, but doesn't matter. Just something that made me laugh. 15 PE ratio, well below the stock market there, especially for this low dividend yielding stock, which is great to see. Metric 2, dividend payout ratio. This is where the company really shined. Annual dividend, $4.52. Divide that by 28.65. That gives you a payout ratio of just under 16%. So holy smokes, is there plenty of room for the company to keep increasing that dividend going forward. Yeah, that's where this dividend should be going, everybody. They got plenty of room to keep on cranking it.
Plenty of room to keep growing that dividend. That's what it's all about, because this dividend growth rate on history right now is over double digits, over 10 plus years. Anthem last year was over 18% dividend increase. I anticipate that going forward, undoubtedly. And you know that premiums are going to be going up to employers and the carriers this year and going forward. It's just going to happen naturally. So expect a big dividend increase this year.
Yeah, that sounds right. And they've increased that for a decade now, 10 plus years of that dividend increase. It's very solid. They're working their way towards that dividend aristocrat status, which is a company that has increased its dividend for 25 consecutive years. Dividend yield for Anthem is 1.04%. So below the S&P 500, but if it's at least going to have a 1% dividend yield, thank goodness it has a double-digit dividend growth rate there of 12%. We always want to see low dividend yielding companies have high dividend growth rates there, so you still have a very strong dividend factor for this company.
Yeah, I mean, that's what it's all about. It's like the seesaw you want. Low on the yield, but very high on the growth. So guys, that was Anthem stock, ANTM. Let's get into that third dividend stock here. Let's crown this king right here. This is a dividend king. This is the king of this ring right here. We are talking Leggett & Platt, ticker symbol LEG, leg, the Hogan leg drop. You listen up, brothers. We're talking about another dividend king here. So Bert, what does leg look like right now?
Oh yeah, Lanny, we're talking about Leggett & Platt. The Dividend King's last trading share price, $41.96. By that by the EPS, that gives you a PE ratio 13.85.
Guys, pretty good price to earnings ratio for this Dividend King. Obviously, they've kind of fallen a little bit on tough times because of supply chain, pandemic, you name it. Leggett & Platt's primarily in your consumer. Think of your couches, your bedding, your car seats, a lot of that manufacturing that's going on. So that's where they play. But let's look at the dividend payout ratio. That's second dividend metric for LEG. Again, trading at 41.96. Now they pay a nice dividend right now of $1.68, throughout the year, or 42 cents per share per quarter. So again, $1.68, you gotta love it, because that payout ratio is Mr. Perfect right there, 55.45% in that 40 to 60% sweet spot.
Yeah, that's excellent. Let's look at the history here. Increase that dividend for 50 plus years, as you said. So they have that Dividend King title, no longer an aristocrat. They are a king. And that 5-year dividend growth rate is 5% right there. So let's look at that yield, Lanny. Tell us about that dividend yield and the bonus metrics.
The dividend yield right now is 4%, a nice little combo between that with the growth rate. A little bit, I would say a little bit on the higher risk for a Dividend King, but again, kind of a boring company to own. But boring can be great, which is why I also just bought 15 shares based on the stock that I sold on Monday. So check that video out if you haven't already. I sold a bunch of stock, and part of what I did was bought more shares of LEG. So guys, in summary, that is 3 stocks right now to buy in January. Bert, you want to summarize store capital first?
Let's do it. Price to FFO ratio of 17.21, payout ratio 77%. Increase their dividend every year since they've been public with a 5-year dividend growth rate of 6%. Dividend yield of 4.50%. Why don't you tell us about Anthem, Lanny?
This is the Anthem. Throw all your hands up. Anthem, PE ratio 15 times earnings. Hey, it's funny when the payout ratio matches the PE ratio, because the payout ratio is just a little over 15%. Again, dividend growth of over 10 plus years at a double-digit rate of 12%. Anthem's dividend yield finally is now over 1%. Now, Bert, what about LEG?
I'll say thank goodness their PE ratio doesn't match their payout ratio, because I don't think they would be on your watch list this month. They have a PE ratio of 13.85, payout ratio of 55%, 5-year average dividend growth rate 5%, and they've increased that dividend for 50 consecutive years with a yield of 4%. So Lanny, obviously 3 great companies, each one of them metrics and company. You can understand why they have made it on your watch list here. Can you rank them for us? Is there a ranking, or are you just excited about all 3 of them equally?
I've been buying Store Weekly. Anthem's right there. I mean, man, I want to see Anthem like somehow get into that portfolio, just because it's a spot that I don't really have. And man, these metrics are just outside of the yield being 1%. Metrics are great. And then LEG kind of falls third. What about you, Bert?
Yeah, I agree with you. Anthem is interesting. I would love, you said what, it's fallen $30 per share this year? You think it's got 34 more dollars here to break the 400 mark for Anthem? That would be something, because if so, we'll be adding there. So I'm going to park it on my watch list in the third. We'll get in play. Even though I have a pretty decent sized position, I like them at the metric, the yield, the factor combination. And on top of it, even though they've been slumping and they have supply chain issues, that's why we look at the dividend payout ratio. That perfect payout ratio lets me sleep at night knowing that even though times may be a little tough to start 2022 here, there's plenty of room to keep that dividend safe. And Store still haven't initiated a position. The only reason I'm hesitant is because I don't know how many more positions I really want to have in my portfolio right now.
All the positions. But what do you guys think out there in the dividend investing community? Out of these 3 stocks, are there any that you've been buying or that you're looking to buy? What other stocks are you buying this month or during that first week of January? Because we're curious, with the market kind of popping up and popping back down, what are you guys doing out there?
If you haven't already, everybody, please subscribe to the channel and give this video a thumbs up. Thank you, everybody, for the support. Let's keep crushing it here in 2022.
And that was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.